Another source that I use extensively is Quicken.com. Until recently, gaining access to market information on this site required a purchase of a product produced by Intuit, the company that produces the Quicken line of financial software. That is no longer necessary. Accessing the information here requires only that you create an account. Once you have your account, you will be able to access the quotes and research information. The first page that appears is the information for Intuit, which, as I said, is the company that makes Quicken products and runs this website. If you are interested in Intuit, spend some time reviewing this page. Personally, I am interested in American Dairy Incorporated, which has the trading symbol of ADY. I enter that information here and select the Go button. The first screen that displays provides a great deal of information all by itself, and more importantly, the information is compared to the industry that ADY is in. However, the information that I am after is one level lower and can be accessed by selecting the Evaluator link from the top of the page. Information here is a walkthrough of the important information that has been previously discussed, along with rough definitions of what each fundamental means. In this case, it appears that the revenue for ADY as compared to its industry is quite high. This is initially a very positive indicator. However, it also shows that the net income of ADY as compared to the industry is low. I will need to do some research and find out what may be causing this difference. Besides growth trends, information about the company debt is available. A company's debt is a very important indicator of overall stock strength. In this case, it appears that ADY has no long-term or short-term debt. This is a very good indicator, especially for a well-entrenched industry like dairy. For organizations in growth industries, like most internet sectors, to have no debt would likely mean amazing profits, a la Microsoft, or a corporate tone of extreme caution with regards to implementing new technology. Either one, depending upon what was found from the other research, could be good or bad. The management performance indicators are my personal favorite. Here I can tell at a glance how well the overall organization is being run without having to attend a single board meeting or, in this case, milk a single cow. The measures of return on equity, return on assets, and return on invested capital tells me how well the organization is managing its cash and how effective management is at turning stockholder equity into revenue. A company that is well managed with regards to how it uses its revenue can tell a great deal about the company as a whole. Market multiples, or what I call the P's, are not indicators that I personally spend much time reviewing. The P's can be very deceptive, and through your own personal research, you will find that some of the same numbers for any given P indicator may be played for or against the organization, depending upon the desire. As such, when I do use the P's, it is only as a final determining factor between choosing one company for my watch list or another. Please know that many investors consider the P's to be very important. My personal decision should not influence your research and ultimate decision as to how or if you will use them. The intrinsic value measure, like the management performance, is a personal favorite. Intrinsic value can be a complicated figure to calculate, but luckily Quicken.com does the work for us. What this measure indicates is how much the company is under or overvalued as a comparison of its true net worth compared to the price of its stock. If a given stock price is $10, but the intrinsic value is $15, then there is value in the company that is either being heavily discounted, or it may be a company that has not yet found its stride and trading opportunities could be plentiful. However, if the situation is reversed and the market as a whole or the industry of the given stock is in a bearish trend, then that difference could be more ammunition for investors to sell the stock. The indicators discussed here and in this session thus far are used by investors at all levels of the trading ladder. They are truly fundamental numbers, and knowing them for your company will have a major impact on the success of your trading. Needless to say, the discussion of these indicators within this presentation is far too brief for you to stop at this point. You are not only encouraged but directed to perform additional research on stock fundamentals so that you can bring them into your personal investor's toolbox with a level of understanding that helps you be a more successful investor. After developing your financial DNA from the last unit and adding in the information gathering tools from this section, the next step is to put the two together and develop a stock watch list. Your stock watch list will naturally begin by your fundamental research, and then through the filters of the criteria you have established will determine what stock should and should not be placed on your list. Even if a stock meets your criteria in all ways, be mindful of other aspects before you put them on your list. Always consider the industry the company is in and find out how that industry is trending. Consider this information in light of the volatility that could be released as a result of market pressures. Also consider what prices you would be willing to pay. I would love to own 1,000 shares of Berkshire Hathaway, the company run by Warren Buffett, but with the most recent share price being $92,490, I would find it a bit difficult buying in. Consider seasonal aspects of the stock. For example, every year just before Halloween, if they are not already there, Best Buy goes on my watch list. I generally consider it in terms of bullish trades, but if the company fundamentals are weak, then I place it on my watch list with bearish trades in mind. Unlike a stock purchase, options allow the investor to be profitable regardless of how the market or stock is trending. Finally, consider only those stocks that are optionable. Frankly, this is the first thing I validate after I consider researching an organization. If I cannot control my risk with option, then there is no point in doing further research. When building your watch list, be careful not to put more stocks on the list than you can effectively imagine. If you have been or are a successful investor, then you may have upwards of 30 stocks on your list. If you are very new to the market or have not been successful in the past, I would suggest no more than 15 stocks. You should know your stocks just like many people know the store where they buy the groceries. A regular shopper at a given store knows where everything from asparagus to Zinfandel is located. If one day they come in and a new display has been put up, or the price of a regularly bought item changes, even by only a few pennies, it is immediately noticed. That is how you should be with your watch list. Initially, getting and staying connected to your watch list will be time consuming. But the more you do it, the sooner your general due diligence on the stock will take less than an hour a week. Not a bad investment considering the potential reward. Please read the assignment instructions for a more detailed description of your watch list and all other assignments due in this unit. As always, good luck, good hunting, and good trading.